Hello, my name is Tyler Shinelli. I'm a professional stock and options trader, and I'm a founder of OptionTradingCoach.com. And I want to welcome you to my trading room. So I've been trading the markets for the last 15 years of my life, and I absolutely love the business of trading. Now, specifically, options are so amazing for new traders and self-directed traders, retail traders, anybody who wants to have a presence in the stock market. Maybe you have a small account, whatever it is. I want to be here. I want to tell you right now that there is a way for you to get involved, and there's a way for you to get involved with very little money. So I want to show you actually a presentation that I did recently at an event, and I want to kind of explain why you need to trade options and give you a live trading scenario that I actually made back in 2012. And this strategy that I'm going to teach you, I'm going to give you a glimpse of it. I'm going to explain how everything worked and how the whole mindset and how a professional trader manages a winning position, and also how you can build a position. So if you might not get the right entry point at one point, how you can kind of cultivate and average your costs down because you have a long-term horizon, you have a plan. This is not a get-rich-quick scheme. Trading the stock market and options and stocks, you have to have patience, you have to have dedication, and you have to work at it. So let's go right into that presentation. So over here, I have an 18-month chart on Netflix. And for those of you that might not have heard of Netflix, it's a TV entertainment streaming company. Very prevalent stock right here. This is an 18-month chart. And down here, this is pretty much the beginning of 2011. So I'm just follow along as I kind of point things out. But the high up here is right around 290 to 310. And we hit a peak right around 300 a share back in the middle, say, August of 2011. And over here, I wanted to point out there's some very heavy support. There's a heavy green line right there. That's considered the support level. And you can see that as we in this channel, you have the red line, which acts as your resistance, and the green line down here, which is dotted, acts as the support. Also, you can see just looking at this chart that I have laid out a resistance line up here at the $200 level. So strictly from a technical standpoint, and a lot of trading in this business, you kind of have to understand how to read a stock chart and understand key support and resistance levels and price patterns and different things to help give yourself an edge and help put the probability in your favor. So this trade actually was made right around here, and you can see I got an arrow to it. It was right around $80 a share when I initiated the first part of the trade. And the first part of the trade was 15 call options that had a January 2014 expiration. And the strike price on them was the 160 strike price call option. So the price paid was $7.50 per contract. And if you take, and if you don't know anything about options, and this might be a little advanced for you, so I'll give you a quick little background. Basically, every option contract is standardized to 100 shares of stock. So a $7.50 contract is a $750 cost. You take $750 times 15, it's roughly $11,200 cost basis on that. So over here, I'm showing you, this is the same chart, but now we kind of are moving ahead a little bit because that position that I put on the first part right there, which is the number one, that was when I put on the first part of the trade. And guess what? It went down lower. It went down lower, so the trade actually was losing money. And the beautiful thing about trading long-term options, also known as leaps, which is one of my favorite strategies in the market, is you have time. You don't have to, because options are decaying assets. And when you're trading short-term options, you're fighting the clock. But when you have 2 years or more on the option contract, then you have the ability to, have some patience, let things work out, maybe build a position as we did right here. So the second purchase was right here at number 2. And you can see that these down here, this is the volume pane. So I'm circling in green right here the volume spike. Why is that important? Because it shows you that there's some significance behind that direction of the move. Volume is what moves markets. So right here, I added to that position by buying 25 more call options of the same strike price and same expiration month. And basically what that did was, and this was right around the point, the first entry was around $80 a share. The second was right around 65-ish. And that brought my cost basis down quite a bit because I bought 25 contracts at $220 a contract. So I was able to basically accumulate 40 contracts at an average cost of $750. So the total cost of the trade was about $11,200. I'm sorry, the total trade was actually $16,700 because the first part of the trade right here was the 15 contracts at $750 a contract, and that basically substantiated the $11,200 plus the 25 more, and that brought me to an average cost basis of $4.40 a contract, which is about $450 per contract, times 40 was right under $20,000. It was a $16,700 trade, and that was the entry point. So just to kind of pause for a second, explain the thought process here, and I don't want to get too ahead of myself because this may be very advanced for you if you're brand new, but hopefully it'll open your eyes and give you the insight of what is possible when you learn how to trade options and leverage your capital for success. So we got in the first two positions here with about a 4-month time span. So there was a period of time, a couple of months when, that first part of the trade, when you paid, whatever it was down quite substantially. So yeah, you could have just stuck with it and waited out. Or if you like the plan and you still feel confident moving forward and you had some support level down here, a double bottom, a volume spike to the upside, and that was my indication to reload and buy more. And that pretty much brought us to here, which is basically the order book. This is the live proof of the trade of how it works. So you can see all of the executions here, and you can see the first ones that were sold, the purchase price, the 15 that were sold here. What is that? $103 per contract. So the highest I sold these for in July of 2013, so almost a year after I initiated the first part of the trade, average cost basis of about $500 a contract, I was able to sell the last couple. See, there's one here that closed $103. That's a $10,000 contract for $103. So if I start down here, I started closing out of the position right here at the first of 2013. So right around January 2013, started taking off a lot of profit at an average cost basis of $20 a contract. And then about a month later, I sold another 5. You can see right there, the average there was $37.50. And then the last 15 were sold up here. There's 6, 4, 2, 1, and 2. And we have everywhere from $56, which is $5,600 a contract, all the way up to the high of $103 a contract. So you're probably thinking, why didn't you hold all 40 contracts and sell them at $10,000 a piece and turn a $16,000 trade into $400,000? Because that's not how it worked. And you can't think, I shoulda, coulda, woulda. You have to think, as far as, strategy and planning and being able to scale out of a position. And I want to show you what I mean, here in this next screen. But this is live proof, and that's a live order book that I took off of my brokerage account. And I wanted to explain that because now this is kind of the whole, bring it all together and how did this all work. So this is the chart, same time frame, 18 months, except we kind of move forward a little bit because now these first 2 spots, that's when I entered into the position. And that you can see here, if I line up, you maybe follow my finger there, you have July and then October. So that couple month time frame was when I was building those 40 contracts, getting that cost basis right. And then over the term of roughly, we got 1, 2, 3, 4, about 4 or 5 months in, had a nice big trend up, surge with volume with a gap up. So I took off my first initial profits. Why? Because one of the rules that I like to teach is whenever you double your money, sell half at least and get your money back. So that first position right here, I sold 20 of the total 40 contracts at $20 a piece. That brought in $40,000. So not only did I get back the $16,700 on the trade, but I also got about a $23,000 profit booked. So now I have 20 contracts that remain, and that's kind of the term is on the house's money, because guess what? I already got my money back plus a $20,000 profit, and now I have 20 contracts that are worth a lot of money. So the second time I sold was right here at number 2. I sold 5 at $37.50. That brought in another $18,000 in profit. And remember, all of these 20 contracts remaining, that's all gravy money, we call it, because you already got your initial investment back plus you doubled your money in profit. So you already took off that 40,000 and now you're scaling out of the trade. So right here in the third spot, we're up to about almost $200 a share, down from 65 to 70, 80 a share. And I'm going to bring this all together and explain how this works in relation to shares and stock. But right here, you can see that I sold 10 more at $56 a contract. That's $5,600 per contract, or $56,000, which is a credit. And then the fourth sale right here, I sold 2 at $71.50, which is a very, very handsome return, considering that the average cost basis was right around $5 a contract, and now it's trading at 71. So that's over 1,000% return on investment at that price level. And then the last one here, I sold those last 3 contracts at $103 each, which is, $10,300 a contract. So to kind of bring it all together and give you a synopsis, roughly a year in the trade, and the entry point was right around June, July, and then my last exit point was right around July, August. So roughly a year duration, about a $17,000 investment that resulted in over a 6-figure profit. And you can see the whole mentality and the strategy and the process of how I like to trade, and professional option traders, how you manage a winning position is you scale out. You get back your investment, you take some money off the table when it becomes available, and then you trade off of your plan and you follow the tools, the systems, and the technical analysis parameters that are going to let you continue riding your winners so that you don't cut yourself short. Because a lot of traders that are new to the market, you might get excited, I just made $20,000, just double my money, I'm going to sell it all and take it off. Unfortunately, that's the wrong approach, because why take off a winning position when you can make more money if you manage it properly? And that's what I'm here to tell you, is that if you can learn this business, you can manage your trades properly and do something similar to this situation, because that's how professionals approach the market. That's how you trade options like a professional. And that's a real life case study of how I did that and how I kind of managed a position and scaled out to where, I could think to myself, I should have sold these 20 remaining contracts at $10,000 a piece and bring in $200,000, but that wasn't the case. And it would have been a great trade to hold it through. But guess what? There's always another trade. And as long as you preserve capital and you have a strong money management plan and you're taking profits and you're following a system, then these trades are going to come every single day. So this is the real overview now, because I kind of explained everything with a chart. Now I'm going to explain the live proof. If you can zoom up here, right here, this is a $114,505 profit that was made on Netflix. I took this out of my income account. It's basically a snapshot from that year when I was trading, and that trade that was $16,000 going in, it made over $100,000 profit. And the way that we got to that number is to purchase the options, 40 contracts. The average purchase price was right around $420 a contract. The total investment was right around $16,700. The average sales price, if I kind of average them out across the board, was right around $35. So the total trade duration was 1 year, and the total profit on that 1 year trade was $114,000. I was always told not to do math on camera, but roughly a 600% return. 833% return. So that was how that trade went down. And this is what I want to teach you, because the power, the technology, and the ability for you to learn this business has never been better and more prevalent for you. So I urge you, if you want to kind of understand how this works and take it to the next level, then please leave a comment or a question below, and I'll definitely get back to you, and I'll see you on the next video.